Stocks bounce after a weak open, even as uncertainty looms over the possible escalation of the Israel-Iran conflict. The strength of a China recovery and the outcome of the US election. IT and financials eke out gains, even as realty and utilities drag.
Business updates on top of lenders. We have HDFC Bank, Bajaj Finance, Bajaj Housing Finance and Bank of Baroda reporting their numbers. Mahindra Finance as well. All of them together put a mixed picture. Even as retailer Avenue Supermarts reports weaker than expected sales growth, the stocks take cue.
Crude prices scale to a 5-month high as fears of Iran supplies being impacted and disruption in movement on oil via the Strait of Hormuz fuel concerns. This even as the demand-supply balance remains comfortable.
Market mavens caution on China. They say that they'd like to see its stimulus translate into economic indicators like property prices. They also point to previous bear market rallies in China that fizzled out, even as they remain bullish on India.
CNBC TV 18 Citizens MPC votes by a majority of 4-1 that RBI will not cut rates in the upcoming policy on 9th of October. But a majority of 3 out of 5 vote that RBI must change its stance to neutral. A very good afternoon. You're watching Halftime Report on CNBC TV 18. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we are seeing some amount of recovery which has taken place for the market. So that's definitely good going. And predominantly, the recovery has come in from the financials. The Bank Nifty, the last I checked, was up over 500 odd points from the day's low. So there's definitely some amount of recovery and buying which is taking place at lower levels, always heartening after a strong session of selling that we've seen. But the one thing that we need to watch for, and which we've been talking about ad nauseum, is the FII figures. For example, FII sold that big, huge level of around 15,000 odd crores in yesterday's trading session. But just in the past 4 sessions, they've sold over 30,000 odd crores. What is positive is that the DIIs have absorbed it in terms of buying. But nonetheless, we need to track what the FIIs do from here on and whether this kind of selling intensifies. As of now, good going for the markets. We've recovered, even the Nifty above 25,400.
Take that point, Ekta. You know, the Nifty is recovered above 25,400. What's important is the way the mid-cap index has moved as well. If you look at just those crisscross lines, you know, for a brief period in the morning, you had way more stocks advancing, way more stocks declining than the number of stocks which are advancing, to the tune of almost 1,500 stocks lower versus about 500-600 stocks which were higher. And now that has, after some bit of consolidation intertwining, that's now reversed entirely. We have 1,500 stocks which are advancing for about 900 stocks which are declining. So this is a trend that we'll watch out for in the second half of trade in particular. And also the answer to the question, whether this is a bounce of the lows from yesterday from oversold zones, or maybe we've made a formidable bottom. All of that we will get to know in just the next couple of hours, and more importantly, over the news that comes through the weekend as well. But the thing that is really worrisome is the FII selling that has sparked off an India versus China debate, largely because of the outperformance that Chinese markets, despite being shut for the last 2 or 3 trading sessions, has been. You know, over the last 1 month, the Nifty has underperformed the Chinese indices. So are funds going in from India towards China or not? Hormaz joins in with the latest on the flows. Hormaz.
You know, these last few days, the fall that we have witnessed in the Indian markets, one of the biggest factors has been the relentless selling from the FIIs in the cash markets. Yesterday was one such incident, almost $2 billion worth of selling. There have been many analysts who have come up and said that money is moving out of India into the Chinese markets, and the graphic that comes up on your screen now will be proof of that. Before going into the holiday season, the Chinese markets, the CSI 300 index, between the 18th to the 30th of September, that 9 trading sessions that they had, the index was up 27% from almost at a 52-week low, jumping to a 52-week high during this period. In contrast, over the last 4 sessions, ever since the Nifty made a record high last Thursday, since then the index is already down 4% from those levels, 1,000 points down on the Nifty, and the fall in the broader markets has been much worse. So there has been an outflow of money into the Chinese markets. But is this the start start of a bull run in China and not so much in the Indian markets? Well, not many on the street are convinced about this rally in the Chinese markets, and Rajiv Jain of GQG is one of them. And he mentions very clearly that how many times in the last 3 years we have seen this excitement only for it to peter out in the months ahead. And he also mentions that if this party in the Chinese markets goes on without them, they are fine with it, and that's because Rajiv Jain in his funds have been underweight on the Chinese markets. And he said that this is a trade, a good trade at that, but is it investable for a 3, 4, 5 year period? That is questionable. Citi came out with a note and they mentioned that the CSI 300, as I just highlighted, was up almost 30% during this session. Multiple policy announcements that were supportive of this rally in China, but this recent outperformance has made sure that the Chinese markets have caught up with India in terms of performance. But in the Indian markets, the strong macro outlook and the flows from domestic investors will ensure that the markets remain resilient going forward as well. And Gavekal Research also came out with a view. They said that even if this China rally sustains, many foreign investors are reluctant and they remain reluctant to invest there, and the headwinds in China will become tailwinds for the Indian markets going forward. And although they put in a caveat saying that while these foreign investors may find better value in terms of a lot of other emerging markets compared to India, but it is too early to call time on India's bull market.
Okay, all right, Hormuz, thanks very much for that. So that's the update coming in on the FII picture. But we did speak to a whole host of experts on what they make of this India versus China debate. Here's what they had to say.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side. And you need a sizable fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.
Actually, I don't think it's a bad thing if China market does well for us, as in mostly for India. It is not bad for India per se. I don't think that beyond some shorter term thing, investors have to sell India to buy China. Because India, I don't think in aggregate, people are overweight. There might be 1% plus minus overweight. So if you were underweight China, that would have come from the rest of the world. India and China, even an emerging market fund combined would be, say, 20 and 25, 26 now. So half the investment of people who are able to move this around is in non-India, non-China.
Even though flows to India funds have definitely waned, they haven't gone negative, and I think India remains in quite a healthy position. It looks to me, at least from this week, that investors were pulling money out of liquidity funds in Europe to fuel this rotation.
Right, interesting opinion coming in from across the board on India versus China, whether China's outperformance could lead to some flows going out of India into China, or is China's outperformance due itself, or is that just a tactical bounce that people are seeing? Whatever that may be, we will know once the Chinese markets open once again. But for now, we've seen some recovery. Nifty closing in towards that 200-point gain mark in today's trading session so far itself. The Nifty Bank moving towards that 500-point gain. All of this versus yesterday's close. From the lows, it's a lot larger in terms of gains. We're at the high point. Take a short break, come back, put focus on a lot of the other stocks which are on our radar. Avenue Supermarts trades under pressure following a weak second quarter business update. Welcome back. The Nifty is now up 200 points. Nifty Bank 500 points. Good recovery is underway. Let's see whether this sustains or not. A couple of stocks, however, underperforming or under pressure. One of them is Avenue Supermarts. That's largely because, the second quarter update has failed to impress the street. What exactly has happened is the company's revenue growth in the second quarter, the standalone revenue growth has come in at around 14%. The number that they've reported is close to 14,050 odd crores. That's below street expectations, largely because of two things. One is that the last 3 years CAGR for the revenue growth has been close to around 16%. In the first quarter as well, the revenue growth was 18%. So maybe the street thought that that would sustain this time around, and that hasn't, as a result of which we've seen some weakness. Secondly, the company has added 6 stores in this quarter. For the first half, it's about 12 stores. And if you look at the last 4 quarters itself, the overall store addition is close to around 12.2%. So with a revenue growth of 14% and store addition of 12.2% implies that the same store sales growth is just about 1.5 odd percent, which again is lower than street expectations itself. What we need to understand from here on when the company reports their numbers is how the product mix has performed, and as a result of which gross margins. And secondly, the performance of their Q-commerce business, which is DMart Ready, is something we will track very closely, because Neville Narona, in an interview to CNBC TV18, had highlighted this trend about 5-6 months ago itself. And finally, we'll also watch out for whether there was a one-off technical glitch where the company was looking to update some of its software, etc., to grow or be ready in time for the festive season, and that has impacted sales in the second quarter or not. So those are a couple of factors. We'll be watching that, Ekta.
Okay, all right, Manglam, thanks very much for that. So yes, pressured for Avenue Supermarts today, and it was pressured for Dabur in terms of their Q2 update as well. Well, as of now, we need to take a short break, but here's some good news for you viewers. India Business Leaders News Leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates just at your fingertips. Download the CNBC TV18 app now from the Google Store or the Google Play Store.
Welcome back. It's a 350-point recovery from the lows for the Nifty, almost 650 points for the Nifty Bank as well. Near 200 points is the gain that we're seeing on the Nifty on an absolute basis at the high point of trade. So perfect time to get you up to speed with all that's happening in the F&O space itself. So look at the frontline indices, all of them doing well, showing signs of recovery. But in that, the mid-cap index is a bit of an underperformer in the sense that it's not gaining as much as the other frontline indices, but it did not fall as much as the other frontline indices as well. What's important is that today's low coincides with the 50-day moving average on both the Nifty as well as the Nifty Bank. Today's low on the Nifty close to 25,094, the 50-day moving average just about 70 points below that. Same is the case for the Nifty Bank. Today's low 51,643. 100 points lower is the 50-day moving average. So the first test of the 50-day moving average is something that the market has seen support towards. But now with the recovery that we've seen, the active option on the Nifty is the 25,000 put. Maybe the street believes that, this would be a mark where we would sustainably see some sort of support coming in. But on the way up, call writers at the 25,300 mark are still fairly active. So 25,300 has about 8 lakh call writers today with a premium of 300 rupees, telling you levels upwards of 25,500 to 25,600 would continue to face some supply. Why do I say that? Apart from the options, we also have the 20-day moving average out there. So the Nifty 20-day moving average is at 25,508, and the same for the Nifty Bank is 52,560. Both of them are about 70 points away for the Nifty and about 200 points away for the Nifty Bank itself. So now that we bounce back from the 50-day moving average, can we cross above that 20-day moving average or not is the big question we'll get an answer to. GNFC is one of the stocks that I'm watching out for among the others, because this one may enter F&O ban given the sort of open interest action that we've seen on that stock, Ekta.
Okay, all right, Manglam. Thanks very much for that. We have Apurva Sheth, who's the head of research at Samco Securities, joining in to discuss the technicals of the market now. Apurva, hi, welcome to the show. Well, it's a session where we are seeing a bounce back. We're building on gains. We're seeing those lows come off for our markets today. In that context, what would your approach be?
Hi, thank you for inviting me on the show. So, we are expecting that the level of 25,000, which is a psychological mark and also a previous high, should act as a good support for the markets. So, from here on, let's see whether the bounce back sustains. So, on the upside, 25,640 and 25,800. These two are levels to look out for as resistances. These were the gaps, the gap levels where the Nifty had formed gaps. And apart from that, for Bank Nifty, I think there's a good rising trend line which is taking the Bank Nifty along right from January 2024. So Bank Nifty is also in a steady uptrend, and this is like a correction. So as of now, the structure is still positive, and we are looking for this as a buy on dips kind of a market, and the targets would remain for Nifty to 26,000 and for Bank Nifty for 54,000 levels. However, from the stocks front, we would like to follow a slightly defensive approach and go with pharma or FMCG names. So on the stocks front, first pick is Eris Life Sciences. So the stock is bouncing back nicely from 50-day exponential moving average. The support is around 1280 levels, and yesterday it witnessed a bulk deal. So there's volume and there's price action also, which is suggesting that the stock could head higher. So the stop loss would be 1250 and the target would be 1500. And another stock is Parag Milk Foods. So it has moved contrary to what the market has done in the last 5 sessions. So all 5 days it has moved higher, and the structure is quite bullish. Over the last 2-3 months, it has formed a good base, and it's forming a double bottom pattern and heading higher. So the target for Parag Milk Foods would be 230 with a stop loss of 200.
All right. Thanks a lot for that, individual stocks and the indices for your recommendations. Wish you a good weekend, Apurva. Take a short break, come back on the other side. There's a very interesting discussion lined up for you. The India's urban consumption boom, all live events, concerts, etc. We have Deepak Chaudhary, who is the founder, EMD at EVA Live, musician Salim Merchant, and Roshan Abbas as well, founder at Commune and Compass. Join in.
Welcome back. Well, good news is that the Bank Nifty is picked up. It's up around 455 odd points at this point in time, showing a gain of almost around 1%. So good going currently for the Bank Nifty. Maybe there's some amount of positive rubber from the likes of Bank of Baroda, which came in with a good update with regards to Q2 when it came to advances. That stock is up around 4 odd %, and that's probably the sentiment is probably rubbed off on the banking stocks today. So as you can see, the index itself is up around 0.8% at this point in time. It's recovered over 500 points from the day's low. But nonetheless, let's shift focus to something which has been making a lot of news in the past couple of weeks: the recent craze over concerts, may it be Diljit Dosanjh, Dua Lipa, and obviously Coldplay's upcoming concert, which has displayed the spending shift and the spending power of urban India. The young are spending more on events, concerts, travel, experiences. But Mangalam, gold prices are still going up. That aside,
Gold, Zomato Gold, and all the golden passes at all the concerts. That's exactly what's happening. That's telling you about, the spending shift. And at the same time, also the value fashion retailers are struggling, whereas everyone else is doing extremely well. Speaks about this shift that we're seeing as well towards events, travel, luxury goods, fashion, electronics, all of them. There were people queuing up for the iPhone 16 even as they ordered it on their quick commerce apps as well. And this is exactly what, brokerages believe as well. This morning, there was a CLSA note saying that on urban consumption, there were almost 1 million people waiting in queue for tickets priced between $50 to $400. That's really 6,000 rupees to about 35,000 rupees for Coldplay. Major concerts, including the likes of Daljit Dosanjh, Dua Lipa, Bryan Adams, sold over 250,000 tickets rapidly. Ticket sale prices, resale prices have actually surged past 5 times the original price as well. And concerts alone, if you just look at the average ticket price selling and the number of tickets which have been sold, generated over 350 to 400 crores in terms of revenue this year so far, which is almost 40% of the listed QSRs or quick service restaurants incremental sales. So that is a shift that we're witnessing in urban consumption. How one plays that and what the future for this looks like is something very crucial to track, largely because we also saw an experience, led surge in World Cup and IPL, a lot of these sporting events as well, which saw a fair amount of surge. So we do have, a bunch of concerts. We spoke about Diljit Dosanjh, Bryan Adams, Dua Lipa. You have recent favorites like Karan Aujla and AP Dhillon performing in multiple cities in Mumbai as well. And then, of course, all of that leading up to the big Coldplay event. And globally as well, we've seen this phenomenon with Swifties, all the Taylor Swift fans going all over, wherever Taylor Swift performs. Coldplay is performing, maybe we'll see something from, Taylor Swift, given the sort of discretionary spends that India has as well. So that is setting that up for you. Let's discuss more on the future of events and how they should be conducted in India and what the structure of this industry looks like going forward. We have, quite a panel for you. We have Deepak Chaudhary, who is the founder and MD at EVA Live. We have Salim Merchant, the musician, and we also have with us Roshan Abbas, who's the founder at Commune and Compass. Roshan, let's start with you. I mean, what, according to you, is the potential size of the events market in India, and what will this structure be? Because on the one hand, you have a lot of people buying or queuing up for passes for some of these headline events, but then there are a lot of events that happen which don't sell as many passes. In fact, they go in losses as well. So what is this structure likely to be and the size?
Thank you. So honestly, I think it's great times for the event business and the concert business. Largely, our businesses are divided into various segments. So corporate events has always been the steady, money earner, which just keeps agencies going. But over the last 10, 15 years, the 2-3 areas that have really, really grown, one, of course, is the social event sector, which is weddings, because as you know, our country is crazy about them. And that is considered to be the largest pie in the entire event business. But the surge post-pandemic actually is a 3x surge of what's happening with ticketed events, essentially. We've already created now, both at one level, the technology, though of course we still need a lot of work in infrastructure because there are just not enough venues to actually handle the demand which is going on. I presume that this is going to add at least 3,000 crores to this market over the next 2-3 years. Of course, if infrastructure, government bodies, everyone supports this business, and this is purely the concerts business that I'm talking about in India. But if you look at ticketed events, when you said that there are ticketed events that actually end up with halls that are not fulfilled, it's actually, when we carry together legacy events from the past, the audience is changing. Their top 3 or 4 focus areas are comedy, music, sports, Bollywood. These have always been great areas. Comedy being the one which has just got added recently over the last couple of years. People like Zakir Khan, Veer Das, etc., filling stadiums, mini stadiums. They're doing 3,000 to 7,000 people in auditoriums themselves. What is still lagging behind a little is the legacy events, which were classical concerts, etc., which used to happen. Theatre also is actually seeing a little bit of a resurgence, but this audience is, the one big change is earlier we would buy tickets extremely early, which we will still do for top-end concerts. But our weekend purchase is extremely last minute. So you'll find people, organizers having mini heart attacks just before an event because they don't know. But, suddenly you'll find that 70% spend is happening in the last week. This is for smaller events where the discretion is left to the very last minute, and that's when young audiences are voting with their wallet. So that's largely the space.
Okay. All right. Well, that's an interesting statistic coming in. 3x surge in ticketing events post-COVID. That's the word coming in from Roshan. Salim, I wanted to get you into this conversation as well. We have 6 big concerts coming up from December up till Jan 21st, which is basically, ending with Coldplay. According to you, which ones will probably be the most biggest money spinners? And which ones will probably see the maximum amount of revenue potential?
I think the Coldplay one is really, has really made a lot of buzz. 3 concerts to sell out like this, I mean, it's kind of weird. But then I am not surprised because, Coldplay has millions of fans, and we are like 1.6 billion people in India. Every 6th guy on the planet is essentially Indian. So you can understand how many, what's the potential of this country's market. It's huge. And I mean, my plight is that, if
I think we've lost that connection. Maybe we can toss that over to Deepak as well. Deepak, we have the likes of Bryan Adams, Diljit Dosanjh, Dua Lipa, AP Dhillon, Coldplay, all of these concerts coming up. According to you, how much do you think each event can probably make on an average?
Okay, so we've seen these days now. I think we've taken some time to get here.
Right, I think we're not very lucky with the bandwidth so far. I hope these concerts go pretty smoothly, unlike the conversation that we're having right now. We'll go back to Salim in just a bit. But, Salim, like you said, actually, we do have Salim back with us. Salim, you said that Coldplay has a lot of fans. The ticket sales and all of that are showing you this. But why do you think, the organizers are getting flack for this? Many are disgruntled. Over 10 lakh people in the queue. Capacity just about 1.5 lakh. Is there anything that, Book My Show could have done better? Is the queuing system that they have similar to global standards? I mean, has there been a fair ask from, or has there been a fair representation from Book My Show's end here?
Well, absolutely. I think they've done a great job. We used to just have this in our dreams that, I hope we can see a Coldplay in our lives, or, like an Ed Sheeran or a Dua Lipa in our lives. And they're making our dreams come true. They're making it possible. And they've done everything, great. I mean, having 3 concerts is not easy, the logistics nightmare, the nightmares that they have to face. But they made it happen. I mean, but like I said, India's 1.6 billion people, we should have possibly had 6 to 8 concerts. Like when Coldplay goes to America, they have so many concerts, in Chicago, in Los Angeles, in New York, in Houston, and whatever. And India is 1.6 billion people. We definitely need more concerts. They've done everything right. There's 4 tickets per person. I mean, just like any international standards, and you really can't stop these resale sites from doing this. But as a fan and as a composer, as a musician, as an artist, I would not go and buy these tickets from resale sites, because I've been in a problem once when I went to see a Taylor Swift concert. I bought a ticket. I bought 3 tickets, and they were not the same tickets as I was promised on the resale sites. So legally, I think, because Book My Show is the only legal site, I wouldn't go and buy a ticket from a resale site. It's because there's no surety that it's going to be the right ticket.
But a lot of people still want tickets, and a lot of people haven't gotten tickets. So maybe, they're looking to get inside that stadium by hook or crook. What we'll do is we'll take a short break, come back, we'll continue our discussion on this very exciting topic. Stay with us.
Welcome back. Well, you're still tuned into the discussion with regards to concerts, how big they are in terms of money spinners. So let's continue that conversation with our guest. Deepak, over to you. If you could give us a sense in terms of how much these 6 concerts which are coming up could probably potentially make on an average, and how much can we probably generate in terms of revenue?
Okay, I'm going to go give a little background and where Roshan mentioned that what was happening pre-pandemic. And so it's taken us some time to get here. there are reasons why we've reached here. From giving a the habit of transactions have changed, habit of consume. This is a new consumer. Okay, so it's actually that change has added to the overall growth. Now, when we saw a Karan Aujla announcing one show and it went sold out, and then they announced a second show and then the third show, averagely more than 13,000 tickets were sold per show. Okay, and then they announced more cities. So 100,000 tickets have at an average of, let's say, around $5,000 at an average Karan Aujla is sold. So more than 50 crore a number Karan Aujla himself is doing. Diljit Dosanjh has, when they got let's say a HDFC Pixel to sponsor, they thought HDFC thought, what are they doing? But they realized they actually registered more than 100,000 cards. And how it happened that the only ticket was bought through an HDFC ecosystem. Now, in that whole thing, more than 100,000 tickets of Diljit Dosanjh have been sold in 10 plus cities, and 3 more cities are getting announced. Now, and at an average again of 8 to 9,000, so more than 100 crore worth tickets have been sold for Diljit itself. Yeah, and if it can keep going, AP Dillon is in the process. Coldplay numbers we all know, more than 150,000 people are getting there in Coldplay in 3 cities, and Ahmedabad is getting announced soon, what I hear. And it'll do 250,000 people, and we know the maths, what's going on. I'm doing Bryan Adams India tour. Bryan Adams India tour is coming with 70 cities in India, and I've sold out most of my cities, and only Hyderabad is little short of sales. Yeah, so that's where the numbers are.
All right. Thank you for the numbers. Just a final word, Roshan. You know, Salim did allude to this reselling and people not buying from reselling platforms, etc. In the wake of all of this, Zomato has come up with a buy now, sell later option. Is that, in a way, you know, nudging people towards scalping or reselling these tickets? Because technically, black marketing of tickets is illegal.
No, absolutely. I think, see, the idea is that today when you go and book a ticket, sometimes for a fixed price on an airline by paying a little bit of an advance, etc., or sometimes you're blocking your space, and there are definitely a certain amount of people who are then not able to make it to a concert. There are changes that happen. It's an impulse buy that you bought. You realize you're in a different city. You're not finding many other things to happen, which is why this is an attempt to try and see that. Because I also know very clearly that there is the limit has been set in terms of pricing. International scalping is anything goes. I mean, just as what Salim was saying, there were tickets for Taylor Swift, I remember towards the end, which were a ticket for £100 was going for £1,500. I mean, 15x the price was a very average kind of thing that was going on. So that a couple of these, what Zomato, etc., are trying. See, we only have 2 ticketing apps largely at the moment. There'll be Zomato, which will be rebranded very soon, and you had Insider, which they've already purchased on one side. Between these two, the attempt to build a larger market size to see what this audience's appetite is. I don't think it's an attempt towards looking at saying, hey, is this a way of making more revenue? I feel that sometimes we're sort of just booking a place for the future. And just as you said, the queuing system that's used in India, which BookMyShow was using, is the same one used at Taylor Swift. Nobody anticipates, the number of people, 15 million people coming in for 150,000 tickets. But really, honestly, I think the focus needs to shift a little bit more on what is the government doing to support this infrastructure, because there is obviously 18% tax on each of these tickets. That is a huge earning. If 3,000 crores is going to come into the kitty, that's money. There are jobs. There are over 1 million jobs that the event fraternity adds to India. These are jobs that young people love. And
all right, Roshan.
Hate, I suddenly was a little worried about. Sorry.
All right, Roshan, we have to sort of end this conversation at this point in time because there's a little bit of volatility which is seeping in back into the markets. So Deepak, Salim, as well as Roshan, thank you very much for joining in and speaking with us and taking us through that. Well, for the markets, yes, there is some amount of volatility which has come in. So the Nifty has given up gains of around 200 odd points from the top. The Nifty Bank has given up over 500 points in terms of gains. So it's completely flattened out, and you can see that on the screen. Maybe the European markets have something to do with it. So maybe the European market should come up for you. The CAC we last checked was trading in the red, which is the French market. So just about lower by around 0.1%. Let's see how things progress. As of now, it seems as though there is some amount of volatility which has come back. The mid-cap index also given up a lot of the recovery that we saw, down around 5 odd points. Bank Nifty is the key culprit again. There's a rapid sell-off which has taken place in the Bank Nifty just in the past couple of minutes.
Absolutely. That was always the worry. The rally that we saw from the lows today, will that be sustainable or not, was the big question. And maybe at higher levels, there is this supply coming in. We're still on sketchy ground. So what we'll do is take a short break, come back.
Just before that, just want to point out that the India VIX as well, that Manglam is up around 5 odd % at this point as well. Just to put it into perspective, it's up around 15.5% this week. Year to date, it's still down around 4.7%, but week to date, it's up around 15 odd % and it's up around 5 odd % at this point. So just keep your eye out on the India VIX as well.
We will most definitely watch out for that. Take a short break, come back. On the other side, we will talk about the markets once again. The mid-cap index has now slipped back into the red with the advanced decline favoring declines. We'll also keep an eye out on all things commodities because that's one of the reasons why there is so much volatility in the market as well. Manisha Gupta joins in with Peter McGuire.
Welcome back. Joining us on the show now is Peter McGuire. He's CEO at Exim Australia. Peter, hi. And it's been crazy since the month of October started with what's happening between Iran and Israel and the way the crude oil prices have reacted. Almost 8 to 9% up in this week itself. Now the street is waiting for some kind of a retaliation, perhaps coming in from Israel on Iran. How are you looking at the markets as we get into the weekend? Would you hold long positions? What are you anticipating?
Well, good afternoon, Manisha. I think a couple of things. First off, it surprised everyone in the sense how quickly this has ratcheted up. We're up 8% this week, 5%, big move yesterday. And the overall theme is, how would you be short? So I think you'd have to stack positions at the moment. If you're a trader, that is, you've probably been enjoying the last couple of bucks as far as movement. There could be a few more dollars. We've got New York open in a few hours' time, 6 or 7 hours. And I feel as though that will probably capture a few more, maybe another $1.50, $2 higher for WTI. We'll just see what happens, and then what happens naturally over the weekend if there was to be any retaliatory action from Israel.
Peter, if there is a retaliation from Israel on Iran oil facilities, what kind of a premium would we see on markets then?
Well, Manisha, you've got so many different choke points. First off, how severe was it? Citigroup are saying 1.5 million barrels a day would be stripped out of the market immediately if it was a severe one. If it was just minor, you'd be looking to 300 to 450,000 barrels. So there's the first part. So that impacts naturally supply. Then if you got 35% of the globe's crude traveling through the Persian Gulf, they would naturally have some major issues there. So that's going to impact supply, and then that would cripple demand. So, Manisha, if this was to ratchet up heavily, you could throw $20, $30 on it or more, that because it's a war premium, and it just depends on how severe this is.
Well, absolutely. Peter, just let's take a step back. And when we did see Russia-Ukraine conflict begin, we did see crude prices go all the way to 120. But in the same year, the closing came in around in 80s and 90s. I get your point. These are war premiums. And we could see that kind of an impact coming for the prices. But given the fact you also have the U.S. presidential elections just a month away, how would U.S. look at the crude prices moving like that?
Well, Manisha, it'll naturally impact inflation. There's something that, I don't think the American voters naturally want to see. And what Biden has come out, President Biden said he may go to the defense of Israel. And this is going to be very interesting from a geopolitical standpoint, because you've got Iran's allies are going to be Russia and China, and how that impacts US. So that's not a good sign at all. What impact did it have naturally to energy markets, gold, and of course to equity markets and US dollar leading into an election. So this could be a very, very dynamic, next month as this plays out. This is very unusual, and it's hard to speculate on how far this could ratchet up.
Oh, well, yes. So, Peter, would you say that a long-term view on crude at this point in time cannot be taken? Would you also advise investors not to keep positions open as we head into this weekend? I mean, how should you treat this?
Well, I think you've got to be very mindful, Manisha, because, you could see whipsawing and, if you're stacking big positions, be very mindful of that, because that's from a, risk management perspective, you've got to know what your risk tolerance is. So there's the first part. And whipsawing won't be unusual. Though markets can gap, and they can gap up $6 and $8 if you get a strike or something happens over the weekend, then all of a sudden you get that, Monday morning and it's just, absolute off to the races. So, yeah, be very careful from stacking positions, be prudent, and there's always next week, because you've seen big moves this week. I'm not going to say you won't see, again, big moves next week.
Oh, well, yes, as uncertain as it gets. Peter, thank you so much as always joining us and analysing the kind of moves that we can see perhaps in case of crude oil prices. As Peter says, if something does happen, then $6 to $8 of a jump up is not ruled out. And if Strait of Hormuz comes into picture, then, well, yes, we are looking at much more higher prices in crude from here on. But with that, it's a wrap on Halftime Report. Stay tuned in, because after the break, Business Lunch takes all the action forward.